Heya Cryptozens, tonight's show. Coinbase CEO sees no risk of bankruptcy. Crypto firms deny Luna UST activity. Kwon has a plan. It's 10 p.m. Pacific time. The date is May 11th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Now take a minute, go ahead and subscribe to this podcast now, because we're here at 10 p.m. every single night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Okay, so this story got people really concerned, and I can see why, because this sounds kind of scary. At least if you're the type to leave your crypto on the exchange, this could be really scary. Which, if you're listening to this show, you know by now that you should be taking that crypto off of the exchange. So here's what's up. Tech stocks are getting slaughtered on the stock market, just pummeled. And crypto stocks are doing no better. And granted, this is a cryptocurrency focused show, but the stock market has bearing in this case, because Coinbase is one of those crypto stocks that aren't doing very well. And some people are a little nervous these days. Big changes happening, bear market, big tokens like Luna and UST crashing. And I tell you, people are nervous. So Coinbase's stock plunges 16% in after hours trading last night. And that's because they turned in a disappointing first quarter earnings report. That drop makes it a total of 44% drop in price from January to March. Net loss of $430 million. The first quarter of the company's year-to-year revenue failed to hit the mark. It fell 35%. The shares were down $61 per. They had been at a high of $380 per share at the IPO last April. Coinbase's revenue is 85% crypto. That's the reason that they gave for the dismal first quarter earnings report. They said increased volatility and a flailing crypto market are to blame. So they turned in a scary bad earnings report. And then they dropped a new filing from the Securities Exchange Commission. It was a new 10-Q disclosure filing, and it got a lot of attention on crypto Twitter. The thing that people worried about on this was it reveals that in the event of a bankruptcy, customers will be treated as, quote, general unsecured creditors. What does that mean? Well, it means that if there is a declaration of bankruptcy, when the creditors are lined up to get their money, retail investors, customers like you and me, we will be last in line to get paid back. So that means that there is a good chance in that case of a bankruptcy, we won't get paid back. So the news that if a bankruptcy happens, customers would lose access to their funds, that didn't go over well with the crypto Twitter crowd. So you take that filing, and then the dismal performance in the first quarter, and you put it together with this filing, and you can see how people get nervous. Armstrong is not having it with all this negativity, though. He was on an earnings call when he said, quote, there are so many customers beating a path to our door that we have all hands on deck just to keep everything running. So the down periods are oftentimes kind of a welcome change from that, in the sense that we get to focus on building the next layer of innovation that will benefit us in the next cycle. Now, he was referring to acquiring talent and focusing on projects when he described his company as, quote, greedy when others are fearful. So it was that he took on what he called the elephant in the room. Talking about the downturn in Coinbase's earnings and stock, he said, broader markets are down. We're seeing a down market for growth tech stocks and risk assets. Coinbase and crypto are no exception to that. The good news is, as a crypto company, we've lived through many different cycles in crypto, including major drawdowns, which I think make us well suited to operate through these environments. And he brought up the fact that the prospectus they released last year, they said their intent was to grow crypto adoption. He said their goal was to run at a roughly break-even point. And the NFT thing isn't doing great for people's confidence in the company either. Armstrong, he referred to it as, quote, an on-ramp to the crypto economy. So that's why it's important to them. Because becoming a market leader in that space is important. Well, the results are less than inspiring. On their first day, they only had 150 transactions total. That's with 8 million email addresses that were signed up. Volume was like $75,000 total. So people are calling the NFT exchange a fail. None of this is seeming to bother Armstrong, though. He closed by recalling that the industry is still in its early days. He sees opportunities for Coinbase in the road ahead and, quote, regardless of the whether the market is up or down, we're going to keep building. Okay, let's take a look at the markets. The bears are continuing to wreak havoc. Yesterday, the global crypto market cap was $1.41 trillion. Today, it's $1.29 trillion. 8.54% loss on the day. The top 5 cryptos by market cap are Bitcoin down 4.97%, Ethereum down 9.5%, Tether, USDC, and Binance Coin down 13.53%. And that's not an error. USDC flipped Binance Coin. USDC is in 4th, Binance is in 5th. Now, I think Celsius started it, actually. I could be wrong, but as we talked about in the Coinbase story, people are nervous. People are scared, and it doesn't take much to spook them. And in this case, much came from Twitter user David Bell. In a now deleted tweet, he claimed that Celsius had been completely wiped out. Now, I saw a number of rumor tweets claiming Celsius was going to be taken out in the same carnage related to Bitcoin and Luna somehow. Crypto Twitter accounts were relaying the information. At any rate, Celsius CEO Alex Mashinsky came out to set the record straight. He posted to his 172,000 Twitter followers. He said, quote, all funds were safe and the platform was continuing to do business. His tweet read, quote, all funds are safe. We continue to be open for business as usual. As part of our responsibility to serve our community, Celsius Network implemented and abides by robust risk management frameworks to ensure the safety and security of assets on our platform. He obliquely mentioned the Luna issue. You see, Kwon came out with his plan that we just talked about, and for some reason, Mashinsky felt compelled to come out and say that Celsius is, quote, not involved in any Luna bailout. Darren Lau, he retweeted Gemini, who said, quote, we are aware of a recent story that suggested Gemini made a 100,000 Bitcoin loan to large institutional counterparties that reportedly resulted in a sell-off in Luna. Gemini made no such loan. It's like cooties. Oh no, we haven't touched that project. And it continued. Kyle Samane came out declaring zero Luna and Terra USD exposure. When asked why, he said, quote, people have made rumors about us before. I figured I would squash. Framework came out declaring themselves Luna free, and so did Sixth Man Ventures. So did On Juno. But some were noting just who wasn't speaking up. Laura Shin released a list of Luna and USD backers. The fact is, the fallout from the Terra USD crash is going to be huge. It's going to be huge, and nobody wants to get blamed for it. And that's why people like on that list that Laura put out are keeping quiet. And even more, nobody wants their project to look weak from relying on or being exposed to Terra USD or Luna. And NFTs are doing okay-ish. The global NFT market cap is up over $10.59 billion. Still, its volume is down 0.98% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are Azuki, followed by Other Deed, Bored Apes, Mutant Apes, and Beans. Now keep in mind, some of these collections have very volatile prices, so do your own research. From the beginning, he was making jokes. Even as late as May the 7th, Kwon seemed immune to concerns about Luna and Terra USD. It was on the 7th that he tweeted, quote, "I'm up, amusing morning. Anon, you could listen to crypto Twitter influencers about UST depegging for the 69th time, or you could remember that they're all now poor and go for a run instead. What are you doing?" He named his kid Luna. On the 16th of April, he posted a picture of his infant with the caption, "Baby Luna, my dearest creation, named after my greatest invention." He spent the intervening time minimizing. He minimized the risks of Terra USD depegging. When he started it, he started minimizing what it meant. It was on the 8th that his tone changed somewhat, less cocky, more business. On the 10th, he announced a recovery plan was on the way. And so it was that this morning, after days of impudence followed by silence, on the 11th of May, he unveiled his plan. First, he laid out the problem as he sees it. From his standpoint, it's a factor of time. Too many stablecoins being absorbed at once. He said, quote, "The price stabilization mechanism is absorbing UST supply over 10% of total supply. But the cost of absorbing so many stablecoins at the same time has stretched out the on-chain swap spread to 40%, and Luna price has diminished dramatically, absorbing the ARBs. ARBs in this case referring to arbitrage. It's the way some traders make money by buying and selling like Luna and UST to keep the balance where it should be, and then they make a profit in doing so." He continued, quote, "The only path forward will be to absorb the stable coin supply that wants to exit before UST can start to repeg. There's no way around it." He brought up Community Proposal 1164. Now, this is a proposal that Terra has already endorsed. What they proposed is bringing up quadrupling Luna's maximum supply. Now, right now, Luna has a maximum coin count of 293 million. This proposal increases that to $1.2 billion. Now, to do that, mining the additional Luna hope to sell on the marketplace and bring the peg back to $1. And on top of that, they're doing the obvious and bringing the anchor yield rate down. This proposal says, quote, "By allowing more efficient UST burning and Luna minting, which will in the short term put pressure to Luna price, but will be an effective way to bring UST back to peg, which will eventually stabilize Luna price." I just don't see it happening, honestly. Maybe before the depegging, but right now, Luna is trading at $1.15 per. It would seem to me that increasing the supply by a factor of 4, you're going to be reducing the demand by a factor of at least 4. That said, Luna's broken. You can't make it any worse, so you may as well try. I do wish them nothing but the best of luck. And that's going to do it for us tonight. Thank you for joining us. I really appreciate it. So if you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace